evening, Trade Flare family. Welcome back to the nightly breakdown, where we break down what happened today in the stock market as well as give you an idea of what we're looking at into tomorrow. Now, before we head over to conduct a technical analysis of the SPY and 5 stocks, let's look at some key points to get a broader view of where we stand. So the first key point I want to start off by talking about is the rotation that we saw today as we started the second half of the year. Today we saw bond yields falling, gold rising, while banks, energy, and industrials were all selling off. Two sectors that haven't moved as much relative to the others this year are utilities and healthcare, and as you can see here, they were up today. The other two that really haven't moved are consumer staples and real estate. It looks like investors are preparing for moderate gains and less buying during the second half of the year, and I'm starting to notice this flight to safety led by the surge in the long-term treasury bond buying. We also saw gold and crypto up today, and I think this is because oil is getting so high it's signaling more inflation. Investors like to pour into gold or crypto when there is a need for a hedge against inflation, or even if they want to hedge against bad policy. At the same time, investors are buying the long end of the treasury bonds, kind of signaling a step in the right direction. We did have jobs growth last month, and this is kind of making the 20-year a little bit more attractive. And overall, as far as bonds go, I expect to see more money pouring into treasury bonds this month. And looking at TLT weekly chart here, I'm looking at this level at 148.73, and this is the level that it hit last August right before the spike in yields towards the end of August. And that's going to be a key level to look out for. If yields start to spike in August, that could be really interesting. If we do break above that 148.73 level, that's going to be key. So keeping my eye on this whole rotation right now. There's a lot to digest. Hedge funds and institutions are really rotating for the second half of the year right now, so we want to be patient and get some more information before we make any calls. Now, headed over to the next key point, I want to talk about crypto and especially Ethereum and give you guys a technical analysis of Ethereum so you guys can see where we are and where we could be headed. Now, the reason I like Ethereum is because I know more about it. It's built on an idea that can work, and the technology actually has value in my eye. I think banks will use Ethereum systems in the future. Ethereum 2.0 is actually the next upgrade that's going to be happening, and crypto investors are really excited about it. The update is said to make Ethereum more practical and usable long term. So let's dive into the charts here, look at where we are, where we could be headed. So looking at the daily chart here, and we've recently broken a resistance trend line. We've given ourselves a chance to start grinding into an uptrend. Now we broke out off of this hammer candle here, and today we had another long lower shadow. What I like about this is that we had tons of volume today. We broke out on some upgrade news that's going to be happening August 4th. This is going to be changing the fee system of Ethereum, but this could be a nice catalyst for Ethereum. Now we've seen this thing move, and seeing that volume is encouraging. Volatility to the downside has kind of faded away, and if I pull up that TTM squeeze indicator, you can kind of see here what I'm talking about. See here how the yellow bars on the bottom here have kind of faded away. If we start to see some nice blueprints on this TTM squeeze indicator, we could see a nice volatile move to the upside, especially as more volume comes in, more hype comes in about Ethereum. So definitely keeping my eye out for Ethereum and crypto. Now to our next key point, which is as always our indices and our sectors. And leading our indices today was the Nasdaq, closing up about 0.5%. Behind that, we had the S&P closing down 0.18%, and the Dow was the laggard to the downside, 0.61% to the downside. IWM, the Russells, the small caps, they also had another bad day, down about 1.5%. Now looking at our sectors, the leading sector today was the real estate sector, and behind that we had the utilities and tech sector. On the downside, we had energy, financials, building materials, and industrials. A lot of big Dow components were down today. That's why we saw the Dow lagging. We definitely saw growth lead value, and we saw big tech leading all of tech. Like I said, the three sectors I'm really looking at are utilities, tech, and healthcare. So now that we have a broader idea of where we stand, let's head over to do a technical analysis of the SPY ETF, which tracks the S&P 500 index. Looking at the daily chart here, we've got big volume, and this can be considered a hammer candle, but if you have a hammer candle at highs, that can also be considered a hanging man. But to me, this candle is just showing me that we tried to go lower, but buyers were still there. The volume's telling us that there were plenty of sellers, but at the same time, I don't think this candle suggests we move higher. We've got lower lows and lower highs. I think a lot of short-term buyers were present towards the end of the day today. Another thing to think about is in all indices, more volume was traded in down stocks today than up stocks. Also in all of the indices, there were more declines today than there were advances. And that includes the Nasdaq, which closed positive, which is telling me a lot of that breadth in the Nasdaq is really coming from big tech companies like Amazon, Apple, Facebook. If we start to see those stocks take a breather, we could see some more downside. So I want to keep my eye on that. So now that we have an idea of where our SPY sits, let's dive into the watch list, starting off with Next Era Energy, ticker symbol symbol NEE. And like I said, I want to watch that utility sector. I think it's kind of awakening right now. And next air is the big cap company with the most weight in the utility sector. Looking at the daily chart here, we've got nice candle structure, nice volume. We've got a nice lower wick off of a 50-day moving average. One thing also that I'm noticing is that momentum is moving positive and RSI is creeping above that 50 level. It's holding there. And if you pull this thing out to the weekly, we've got a really nice clean bullish pennant. It's coming from a larger bullish trend, and I really do like this company right now, and I like the move that this sector is making. So watch next era energy, looking for that break of that bullish pennant resistance trend line. Next up on the watch list, we've got Etsy. So looking at Etsy, recently we had this range, broke out of this range, gap down, filled the gap back into the range. Now looking at daily candle structure today, we have a hammer candle right off of the bottom of this previous range. The hammer candle is going to be a bullish reversal candle. And the bottom of this range could act as a really nice retracement support, so we could keep going higher. I like that we had volume there to support us today. This could be a nice setup into earnings, especially with Amazon leading XLY and online retail. It could trickle into the rest of the online retail companies, so keep your eye out for Etsy. Looking to take out highs over here at 207 to possibly fill all the way up to 226.63. So next up on the watch list, I've got Chegg, and Chegg was running today, and I think this is because the jobs data supported the fact that kids are going to be returning to school in the fall. Jobs in education had the second largest increase last month. And another thing I want to point out is that Chegg has historically ran up to earnings in July. Last year at earnings time, the stock price was sitting around $89.90, and I wouldn't be surprised to see another run up to that level, or possibly even a breakout before earnings, as we see more kids planning to go back to school. Looking at daily candle structure, this is a continuation candle that engulfs the prior week's range, has decent volume supporting it, and it looks like as if this thing could be setting up for a pre-earnings move. So definitely keeping my eye on Chegg as we head into earnings season. Next up on the watch list is gold, ticker symbol gold, and gold was up today, and this is because investors usually dive into gold and crypto to hedge against inflation or bad policy. We're most likely up today because we saw oil prices surging, indicating more rapid inflation in oil, and that could have sent some investors fleeing to gold and crypto. Now looking at the price action here on the gold ETF, we have a gap up today on strong volume. Tomorrow or through the rest of the week, I'm looking to see if we will go up and test the bottom of this gap here at 2178. So I'll definitely be watching gold and crypto as the oil prices surge, and I'll be keeping my eye on this gold ETF and watching the option chain. And that wraps up tonight's nightly breakdown. If you enjoyed the video, if you gained value, or if you learned something, make sure you hit the like button, and don't forget to subscribe so you can get notified whenever we post any live or educational content. If you're looking to join our team and be surrounded and motivated by our online community of traders and investors, as well as gain access to trade signals that let you know whenever we make a trade, check out the link in the description below to join our Discord, gain full access by upgrading to TradeFlare Pro, get half off your first month using the discount code TFPRO2021. But don't be mistaken, we are not financial advisors, and none of this is a recommendation. The stock market is risky and you could lose money, so use the information inside these videos at your sole discretion. And as always, you cannot forget that time is your most valuable asset, so quit wasting it. Get up, get out, and go get it, my friend.